One of the things that I was thinking about regarding today's talk about support and resistance is not just to discuss the different tools that I use for support and resistance, and certainly not to limit to understanding chart patterns or trend lines or horizontal support and resistance lines, psychological levels, pivots, Fibonacci, all those things that we look to a chart to determine support and resistance. But I think what was always unique about what I did with support and resistance, and what I hope to share with you today, is really the philosophy that shapes all my opinions about what it is that support and resistance does for me. Now, I'm going to tell you that some of it's probably a little bit different than what you've heard, and that's fine. If it is different than what you've heard, this is another way of viewing this topic, and hopefully it'll start a discussion that we can continue over at the Daily Forex Trading Edge. And if you haven't ever checked that out before, here's a URL. Daily Forex Trading Edge. Of course, there's also the YouTube videos we have over there. I'd sure like that to fit on one page. There we go. Interbank FX videos. Okay, so these are the two great resources. But when it comes to this idea that I have about support and resistance, I'll tell you that it doesn't begin and end simply with just those lines and levels. I'll be frank. I think indicators are another way of looking at support and resistance. I don't care if it's you guys probably already know, if you watch me for any length of time, that I look at MACD histograms for my momentum trading. For trend reversals, I'll look at a commodity channel index. For range-bound trading, I'll look at a stochastic. And even when it comes to indicators, I think these are just other ways of looking at support and resistance. So let's get to the charts here for a moment and look at these indicators and look at these price points. But what I really want you to keep in mind throughout our entire talk here today is the fact that, in my opinion, everything that I'm doing on a chart is about finding decision levels. And decision levels are those levels at which prices could stall, they could reverse, or they could accelerate. And what we're looking for is some sort of reaction. And if we're doing our jobs on our charts, the price levels that we identify as support and resistance will hold that reaction, will be where that reaction is waiting. Okay, so that's the whole idea. So whether that be, again, an indicator, whether that be a major psychological level, it's all about finding those decision levels at which we'll see some sort of reaction. That is what it's all about for me. And that's what our discussion about support and resistance tonight's really gonna focus on. So here we're looking at the daily time frame of the Euro US dollar. And what I want to do now is look at the two tools that I have running here and focus on just, again, the myriad of ways that we can identify support and resistance on a chart. And I should not neglect the 34 EMA wave, which is on here as well. So I actually have three different tools at work here. I have the auto chart patterns, which, by the way, what are chart patterns? They're trend lines, they're horizontal support and resistance levels. We find a pair of lines which form a shape, which we then call a chart pattern. But really, what are they? They're just support and resistance, right? They require some touch points from which a line is drawn, which we would expect some sort of reaction, right, to take place. I mean, what happens if we break higher through this resistance level right here? Let's bold this up for a moment. What is our expectation for price action if it breaks up higher through this level? The bottom line is, the reason we look at chart patterns, the reason they're so important to us, is because it's our expectation that if and when prices are able to break through this line, we'll see what? Acceleration to the upside. Now, we know that as prices are testing that level, there's a chance the selling pressure could continue to keep prices below this level. But really, what we're hoping to do is capitalize on this movement that makes that specific area, if I want to highlight this area right here, this yellow area, that area becomes, again, the decision level, because if we are able to get enough buying momentum that can carry us through this price level that before continued to be where the bears would step in and add selling pressure, we can take out that resistance. Our expectation is the bull should be able to run. So our initial expectation is, yes, prices might stall, and if they stall, they then might reverse 2 of our 3 reactions at a decision level. But if we do not stall, and we don't see a reverse, we're very likely to see the only other thing prices can do, which is accelerate higher, which is exactly what we saw. And again, this is a resistance level, but it was also part of a chart pattern, a very, I'd say, unaesthetic ascending triangle. You can see the pattern result right here. It's an ascending triangle, which led us to the prediction area, which you can see in this gray box. What is this gray box for those of you that use AutoChartist? It's support or resistance, right? In this case, since we broke up higher and prices were accelerating to the upside, that area between 41.62 and 45.03 presented a large area of resistance, of selling pressure, of an area where we feel the bullish momentum will give way to what? The bearish selling pressure. And that's exactly what happened. This acted as resistance in the lower, say, quarter of this fairly large area. And we can see that prices begin to do what? They succumb to the selling pressure, and another decision was made. This is a decision area. Obviously, it wasn't just a level. Okay, it was a giant area. It was a giant area of resistance where we suddenly saw the reaction, which was moving prices lower. So again, support and resistance, really, I think we have to take it back to what I was talking about before, which is the reaction. Do you understand what the reactions can be? Prices can only stall, reverse, or accelerate. And if we found a decision level that I think is meaningful, means something to the market, it holds a psychological reaction, then we are well on our way to identifying those spots on a chart that we want to do something at, whether it be the breakout through the triangle or whether it be the exhaustion in the prediction area. And this is just one way of identifying those support and resistance levels. What else is on this chart? The wave, which is a dynamic support and resistance tool in the context of an uptrend. Let's take a look at this tool here. Let's go back a little in time, and I'll show you. Take a look. When the market began to climb, when we were correcting back lower with what was a dominant bullish sentiment momentum which culminated into the uptrend, when we did correct, notice that when we did correct, where do we correct into? We corrected lower into the support of the wave. And that's one of the reasons why, and let me grab my handy dandy drawing tool here. Okay, so when we did correct, now here the angle is not as strong and is not probably what we'd want to see in terms of a, let's call it a 12 to 2 o'clock angle. Here again, we really didn't see quite, again, we're starting to lose it. Here it's just starting, you know. Here we're starting to lose it a little bit, moving sideways. So when we do take on that 12 to 2 o'clock angle, which I could say we definitely probably had it in place from about this area to obviously when we finally broke down. But through this area here, we were dealing with that uptrend. So what I want to highlight is the fact that when we did correct, where do we find support? In the wave. Over. Even if we came short of the wave, here it was short, but here. Now, for those of you that are familiar with my swing trading, which is exactly what that is, you might know that adding the other top layer of that swing zone, which is the 20 period simple on the close. I usually like to make this like a silver or a grayish in color. Okay, there it is. I don't need it quite that bold, but I wanted you guys to see it. And here are the tools running on this chart, by the way. So if I want to go ahead and edit this, make it a little bit skinnier so it's not quite so prominent on the chart, but here's the zone. Another layer of support on this chart beyond the wave, as you can see on some of these pullbacks that fell just short of the wave while we were moving up higher. Take a look. It hit the 20 period, hit the 20 period, hit the 20 period. Here it obviously hit the wave. That's why we make this area a zone. This area here, that's why that area between the 34 EMA high and the 20 period simple is a zone. So all the way up, this green area, little river of green that I've created here, the area between the 20 period simple and the 34 EMA high, that's that zone in which we want to go ahead and look for those opportunities to buy into pullbacks. What is a 20 period simple? It is a dynamic support level. Now you're going to hear me refer to levels as dynamic and as static, and all that means is dynamic means the value is going to change. So we're talking about moving averages, the wave. Okay, when I talk about static, we're talking about those horizontal levels, and those are going to remain the same. Okay, so it's a static level. Those horizontal levels are static. Support and resistance, pivots, Fibonacci, psychological levels, those would be static, while your moving averages, 34 EMA wave, okay, those are going to be dynamic. A trend line is dynamic. That's a great, if I'm going to compare two very easy tools, a trend line is dynamic, while a horizontal support and resistance level is static. Okay? That's the major difference in terms of the types of levels that we'll look for on a chart. So one of the other tools I have running on here, we talked about chart patterns, just talked about the wave. By the way, in the context of the downtrend, you can see how the 20 period simple moving average acted as resistance. We never quite made it to the 34 EMA low, but look at the 20 period simple moving average. Let's clean up this chart a bit. I don't need the chart patterns on here. Let's just remove them for now. Boom. Another one of the tools that I have running here is the power stats. You can see that right here. And this is another way of deriving support and resistance. And again, this goes back to that philosophy I mentioned, which is I truly believe everything on the chart, including indicators, are just ways of identifying support and resistance. So in terms of what we want to do with this tool and what it means, let's examine this a little closer. Power Stats is an interesting tool because the way it derives support and resistance, of course, based upon price, but it's also based upon time. So for those of you that are familiar with this tool, and again, this is where support and resistance isn't just the lines and levels you draw in a chart or chart patterns or Fibonacci or Elliott wave or any other of the many ways we can, candlestick patterns. There's so many ways that we can derive those decision levels from. Okay, this is based upon time. And I did a fairly lengthy talk on this topic. However, I do want to show it to you one more time for those of you that did not see it, because I think Power Stats is just such a powerful and unique way to look at price action that since you do have access to it as an IBFX client, that it makes total sense to, I'm bringing it up right now, makes total sense to share it with you because you can access it from right within the Interbank FX Trader 4 platform. So what I've done here is I've just brought up the IBFX Connect window. See that right up here? It's the IBFX Connect window. And this window will allow you to access a number of things right from within the platform. If you don't have this window up right now, you can take any chart and turn it into an IBFX window. All you've got to do is go to your navigator and drag and drop drag and drop the IBFX Connect EA. Okay, you see that right here, the IBFX Connect EA. You just drag and drop it onto a chart, and then it will then turn it into this right here. And from here you can access a number of very cool tools. One of them being the IBFX. It has the old PRS, okay, for those of you that are already using this is already familiar to you. But this is the IBFX PRS, which is the Auto Chartist platform, and everything is built into this window now. Now what you notice is this opened up a new browser window from within the trading platform. So you click on that and then a separate browser. So I think this is Firefox that just popped up. So from within this window, you can actually access the price movement analysis. For those of you that haven't looked at Auto Chartist lately, by the way, we have Fibonacci patterns, we have chart patterns, and actually there's a new feature to this coming very soon, which is going to be a key level, which is support and resistance. It has not been released as of now, but the next talk we have this month, by then it will have been released and we can talk about it then. So in the meanwhile, here's the price movement analysis, or the Power Stats. I'll zoom in here a little bit. And what you'll see is a number of ways that price action and pip movement has been dissected to yield another view of support and resistance. That's what makes it so cool. This is a combination of time, historical price movement, and therefore volatility, and support and resistance. And it's not just based upon identifying a price level at which we think support or resistance could come in, but also when you look at the movement per hour of day, we're talking about an average pip movement, a high and low to that range. We can see how the pip movement increases and decreases at certain times of day. And this is an excellent tool to add to supplement any other support and resistance analysis that you're doing, because let's think about this for a moment. If I know at a certain point of day the price movement that I'm liable to see could range anywhere from, say, 35 as an average to 50 or even down to 25, what are the factors that will influence whether or not I'm moving 35 pips, 50 pips, or 25 pips for that hour of day? The economic calendar obviously is one, right? What's going on geopolitically? Obviously, we are dealing with an historical, unprecedented time in terms of what's happening with price action and what's happening with sentiment because of Europe. So where we are along this area of potential price movement will have a lot to do with what headlines are hitting traders on any given day, at any given time. Rumors will also obviously affect this market. In fact, today, I think there was a small rumor about some sort of Italian bailout, and the euro started to climb going into the close today. So again, all sorts of unusual things are happening on a regular basis, but I know that for the most part, historically speaking, this is the range. Now, here's where I like to take another step with understanding the range and then looking at my charts. And that is, on any chart, especially if you start going intraday, shorter term intraday, you could have a number of levels that are in play. You could have a number of support and resistance levels that you could have drawn that could potentially be in play. Okay? And we're going to talk about major and minor levels here in just a moment, and look back and things like that. I'll be talking about that in just a moment. I could connect a lot of different touch points along this chart, and with that are the probabilities and my estimation of what levels could actually be, again, like I said, in play, impactful on what I'm liable to see happen on this chart. So again, I'm just connecting the dots on a number of price levels here to yield these support and resistance levels. Of course, we have our power stats here as well. So time is a factor. How much time we have will dictate how far we could possibly see price action go. So time's a factor. I could pull a Fibbo. It's very tempting to pull a Fibonacci, although this is going to make this chart very messy, but I could pull a Fibonacci from this recent high to low and add in a whole bunch of other levels, right, to this chart. But the bottom line is, depending upon the trend line's proximity to current prices and my understanding of the potential volatility of this pair at a certain time of day, I can then begin to understand which one of these levels, which one of these many levels could be reached, and therefore become a decision level sooner rather than later. So what I want to do is start to discuss the touch points, look backs, and major and minor levels with you right now. What's really interesting about this for me is that this discussion of touch points, look back, and major and minor levels really came about when I was working with my programmer. I have a programmer that I've been working with for many years, and if there's a tool that I use and I want it automated, then he would program these things for me. And he had done a number of these things. A lot of the tools you see on my Interbank FX Trader 4 platform actually were born from my stock and futures trading going back 15, 20 years, and the work I used to do on my e-signal charts. And he was he is an e-signal programmer, and I would say, you know what, I really like support and resistance automated. Oh, you know what, I'd really like a pivot point tool, but I want to be able to control the stop and start times for my pivot points, especially when I started trading Forex. The reason I initially wanted to control the pivot point start and stop times is, for example, if I'm trading the stock market and I'm trading any one of the stocks I was active in back in the mid to late 90s, and then I started adding in futures. The open and close times between, say, the 9:30 Wall Street bell opening and, say, the 8:30 a.m. futures market real trading hours beginning, and then, say, the difference between trading the E-mini S&P, trading back then I used to do a lot of trading in Microsoft and Cisco and a lot of those tech names back in the day. And then, for example, contrasting that to the cocoa market, very volatile market. Cocoa opened and closed in a very different set of hours. So if I wanted to overlay pivots on a market like that, I couldn't use a pivot that started with, say, the Wall Street open and close. So I had to have a adjustable pivot tool. So he programmed that for me. Then I wanted automated support and resistance levels. And that's where really this touch point, look back, major and minor levels conversation came from. He also helped me design the automation of the grab candles. I told him what my wave was, and then he was able to also, so that's where all these tools are born of. And these aren't tools that are recent tools that I've added to my Forex trading. These are tools that I used back when I was an active futures and stock trader as well. So, it's less about the market and more about the psychology of the market. So, going back to touch points and look back and major and minor levels. So this all started as I was learning more about programming and what it took to actually create an automated indicator. I wasn't really looking at automating my trading. I was looking at then, and I still really seek to do this, I was looking at automating my analysis, my homework. I wanted it's the difference between when you're a kid and you're having to do all your long division by hand versus a calculator. Calculator's automation, right? I've got on one hand, I've got pen and paper to do my homework versus what? A calculator. Right? That's the analysis that I had made. I wanted this tool to help me with my homework. And if you think about it, it was a necessity because I was looking across multiple markets. I was looking at multiple time frames and doing all this simultaneously. I really couldn't keep up. I found myself missing trades. So I figured the more I could use a calculator, the quicker I could go, and the more accurate I would be. In this rush, I wouldn't make mistakes. So that was the goal. So then as I'm talking with my programmer, he taught me all about what it is he has to think about in order to analyze this. So he says, what happens when you draw a support and resistance level, horizontal or dynamic, static or dynamic? You need a minimum of what? 2 touch points, right? That's usually what we're looking for, a minimum of 2 touch points. Because you're using those 2 touch points to do what? We're connecting the dots, right? When we're drawing those trend lines, that's exactly what I used to do back when my charts were on paper and I would sit there with a ruler and a pen and I would literally connect the dots. So the touch points, I need a minimum of 2. Okay, so he had to program my software that he was programming for me to find at least 2 touch points to connect the dots. Well, then I also brought this idea of how far back are you looking? And I said, gosh, that's such a great question, because one of the things that I've always noticed and talked about was this idea of how much data is on your chart. And when you look at this idea of look back, when you look at this idea of this market memory, I also call it market memory or look back, how much data is on your chart? For most people, I found it was completely random. They did not think about how much in terms of how many days or hours, minutes, whatever it was. They never thought about what they were including on their chart view. How do you, right now, how do you determine your chart view? And what's even more interesting is a lot of people have different size monitors, different size charts, different shaped charts. Some of us are very comfortable with very large candles. Some of us want to see a lot of small candles. There was so much it went into, and I just found it was very random. Random depending upon the person's individual needs, or random depending upon the fact the person did not even consider what they were looking at on their chart. So for me, that look back question that he had presented to me was really interesting, because when I understood that this had to be a conscious decision, I started to dissect each and every one of my time frames to understand that if I'm going to connect the dots, how far back am I even looking to start looking for dots? Does that make sense? How much data are you looking at in order to find those actionable, relevant decision levels that you feel are most likely to be reacted to? Let's go back to our chart here. So when I'm looking at a 30-minute chart of the Euro-US dollar, we can go through all the time frames that I trade right now, and we'll talk about look back. What I started doing is I started looking at my analysis. I started taking a lot of snapshots of my charts. I started basically deconstructing everything I was doing, because after a while it became less of a conscious effort and more of just habit. You know, I wasn't thinking about these things consciously. I just knew what I was looking for, and I just drew them, kind of like the way I draw Fibonacci now. I don't have to think about it. I know what my minor and major levels are. I know what the most unretraced move looked like. In other words, that most significant last major move. So last major move is very subjective, but over time I just got good at it, and I stopped thinking about it. It just became something I could do without so much conscious thought. And eventually, I had to go back to when I did have to dissect it, when I did have to look at every high and low and wonder why I ignored one and not the other and so forth. Anyway, he made me think about all these things, and what I hope to present to you now is a series of questions of, if you are looking at a certain time frame, how do you determine what you're including on your chart? Is your view of a 30-minute chart 2 days? Like this? Or is it closer to, say, 1 week, like this? Or maybe closer to 2 weeks, like this? You know, which is it? For me, it's on a 30-minute chart, it's going to be no less than this 1 week. And I really don't need much more than the 2 weeks. In fact, what I was noticing over and over again on a 30-minute chart is what you'll see right here. I could connect some dots going back in time, but they really weren't in play any longer. And my most recent price action was 1 week or less. There were still some important levels that may have gone back 2 weeks, but I noticed over and over again that 1 to 2 weeks seemed to be that magic window of those important, psychologically relevant trend lines and horizontal support and resistance levels, because it's all about what's in play, right? It's all about what I could potentially see being reacted to. I could draw a trend line way up here, and that is an important horizontal level. This level up here close to 30, what is this, 38.50, 38.54 is what it's showing me in this area here. That's an important level. It's a double top. 1 touch point, 2 touch points, nearly horizontal double top. But I'm sitting down here at 35.90, so that's an important level, yes. If I take a look at the window that we were looking at before with the power stats, and I looked at the Euro-US dollar, at any given time, is there a big likelihood that within the next day or two I'm going to see that level? We could. I'm not saying it's not possible, but how long could it take? It's probably going to take a pretty long time. Looking at the price range movement, probably going to take a pretty long time to even get there. And even at that, I'm probably not going to get much higher than 37.12, according to Power Stats. And I'm talking about a 38.60, 38.50 level. So, important level? Yes. Major level? Probably not. So how did I start to determine the look back and then understanding major and minor levels? So let's finish the look back on each one of these time frames, and then we'll move on to major and minor levels. We're going to jump up to the daily chart and go with the understanding of look back starting from here. So let me just clean this chart up. I don't need all these trend lines here. So again, what I want to really stress is the fact that when I was determining all these things about my trading, determining what it is that I want to be as a trader and how I want to analyze the markets, for me, price action was price action, and as long as the market was liquid, in other words, lots of volume, I was really after the psychology of the market. And obviously, I have to understand what affects the psychology, but for me, to this day, trading something like the Euro-US dollar is not all that different to me than trading something like the US dollar index, or the Dow Jones, or Apple, or cocoa, or crude oil. It's all psychology being measured by these candles on a chart. And therefore the support and resistance, again, is about decision levels unique to the psychology that I see, not for that symbol, but on that particular time frame. That's a huge distinction here. We're not talking about the psychology for an overall market. I'm talking about the psychology specific to the time frame. Very important distinction. The psychology of an individual time frame is a very important one to understand, because looking at the daily time frame of the Euro-US dollar as we are right now, the look back that I want, by the way, is 1 year. Now, one of the realities that we all have to accept is the fact that our charts and our chart sizing and our monitors and whatever else are not necessarily going to yield a perfect 1 year look back. So this is a comfortable view, this chart sizing. I will say that this is a little bit larger than what I typically have on my screen. So if you were here in my office right now, this is probably about 40 to 50%, not quite 50, probably 30 to 40% larger than the size of chart that I have across my trading screens. So obviously that's one factor that will affect how much and how small the chart will be in terms of the candles when you squeeze in your look back. But notice just one notch, I've jumped from what was that comfortable view from the current date to the first week of February. Okay, I need to go back to November of last year, which is right in here. But you notice it took me back to April of 2010, which is, now I'm dealing with how many extra months? Well, this is the end of April, so June, July, August, September, October. I'm dealing with 5 extra months here. So I went from what I need as far as a 12-month look back to nearly a 17-month look back. Well, what I'll tell you is if you have these problems where I'm going to tell you that the daily chart needs 1 year, don't worry about this extra data. What I want you to do then, and it just makes it real simple, go back and find essentially what would be, 1110. Drop a line there, simple as that, and just look at what the dominant psychology has been over the course of the last year. And you don't have to neglect this price action either, but this is the most important set of candles that you want to focus in on. What has been the dominant psychology over the last year? Where are we in relation to last year? If we take a look at this Euro-US dollar over the last year, Have we gone anywhere? Very interesting, isn't it? That's basically where we were last year this time. Pretty interesting, right? You'd think the world is melting down, and in many ways there is a lot of trouble out in Europe. But price-wise, very interesting that we really haven't gone anywhere in a year, have we? Okay? Very interesting, the relationship between the euro-US dollar. I'm not saying that we're in the same boat. By no means are we. But I just find it interesting with everything that's going on. Here we are, pretty much the same place we were this time last year. Fascinating. All right, so there's my look back. And within this look back, and here's another important part of, and the importance of the look back, whether you're in this view or whether you're even in the more comfortable view, you'll notice that here with February, what are we missing? We're missing November, December, and January. So we're 3 months short. But notice the angle of the wave isn't all that dissimilar to the angle of the wave here. Because remember, the angle of a moving average, depending upon how much price action you've squeezed into the chart, can be very subjective. So be aware of that. But either way, we can see the 34 EMA wave is moving more at a sideways type movement. Sideways type price action, which indicates at the present moment, hard right edge, kind of a neutral, hence the blue candles, to bearish tone. And we would see that in either one of the views, the 17-month view or here, the 9-month view. You want to get as close to 12 as you can. If you initially have to go over, that's fine. From this view, what I want you to do is take a look at recent highs and lows. From this view also is where you're going to be doing all your trend line drawing. Okay, this is where you're going to be doing all the drawing of your trend lines from the view of the look back. Now you might notice some more when you zoom in because some touch points will be easier to see. That's certainly very true, but the relevant highs and lows that are the touch points, the dots that you're going to connect, are visible from this view. And that's where I want you to do all your drawing. In fact, if you step back and look at the euro-US dollar over the last year, it's actually simply forming a very, very large triangle. So then you can zoom in. You don't have to stay in that really squeezed in view. Once you've done your homework, and by the way, you might notice last major moves from which you want to draw Fibonacci's from. I could draw Fibonacci from this low to this high right now. All right. Static support and resistance. So the look back on the daily is the 1 year, and I hope what you've gotten so far is what it is you're viewing from the look back, doing your homework from the look back. And by the way, when you squeeze in and you notice, oh, I missed a touch point here or there, go ahead and make the adjustments. Okay, but do most of your trend line drawing or even chart pattern drawing from that look back. Here's a downtrend line where I could probably put in a very large channel. Remember, if you start getting into chart patterns from your look back, be very conscious of which chart patterns are relevant to the current market trend. Okay, so a channel down is a downtrending pattern, which is a very powerful one. I could have drawn one back here, like this. At the time, it would have been very relevant. Okay, and if you were to kind of imagine where we would have been at this point in time, that's a beautiful channel down. That reversed. Boom. Decision level. That was the resistance level. Here was the support level. And you know my love of color coding. Resistance level taken out. And then at that moment in time, what happened? Pretty simple, right? We saw the breakout. Bam. Just like that. And the subsequent follow-through that we're seeing now. All right, so let's go to the smaller time frames and look at the look back for each one of those. But I want you to understand what it is you're doing from within that look back, and when you can just go ahead and zoom into a more comfortable view, if that's what's comfortable for you. I have no problem with this view, by the way, because one of the things the grab candles do for me is they don't require that I have that more zoomed in view, because at a glance, based upon the grab candles, I can see the neutral sentiment. I can see the bearishness. Based upon the wave, I can see the market trend. So the grab candles and the wave offer me the luxury of staying within that look back, specific to each time frame, for pretty much as long as I want. I can zoom in and zoom out, but I don't lose the story the market's telling me because of the smaller candles, which I think happens when you have the classic black and white or green and red. With the addition of the blue and the addition of the wave, I never really am too far away from visually, at a glance, interpreting what it is the market's telling me. So let's go down to the 5-minute chart and talk about look back. Now, this isn't a time frame that I do a lot with unless, and this is where I'm fairly busy right now, unless it's the end of the year, or unless I feel the market sentiment is shifting so wildly that I don't think longer term trends and follow through are reliable. Sounds an awful lot like what's happening right now, doesn't it? And that's another reason why I've really been focusing so much attention on the 5-minute between the greens. If you have never seen me talk about this particular setup, then that's really what we're talking about here. 5-minute between the greens at 13, 21, 34, 55 EMAs. And for that setup, we're looking at a look back of about 1 to 2 days. And you can see that right about here, about 1 to 2 day look back. Again, what am I doing from this view? Well, I'm not as interested on a 5-minute about drawing trend lines and so forth. For me, the look back is more important from the perspective of, this is also where I take the wave angle, take a clock angle reading of the wave from this perspective. So 1 to 2 days. Usually ends up right around 1.5, which is fine. For a 15-minute time frame, and let me go ahead and just clean this Fibonacci off here. There we go. So for a 15-minute chart, it's 3 to 5 days. 3 to 5 days. So again, if I'm looking at it from this view here, you can see it's about 3, just actually it's about 2 really. And then if I squeeze in one more notch, it puts me at nearly a week. Well, that's fine. If it's the option between 2 days and a week, take the week, draw your trend lines, support, resistance, look at the last major moves, draw Fibonacci if you want, whatever you have to do from this view. Go ahead and do all the drawing. Take an angle reading of the wave, and then you can go ahead and expand out. By the way, the angle reading of the wave, even from this smaller look back here, is still that non-directional sideways chop that we saw from within the look back. So you'll see that very often, but I think it's still better to take your clock angle reading from within the look back when you're doing all your trend lines and you're looking at your overall trend and sentiment and things like that. So 15 minutes, you're looking at about 3 to 5 days. 30 minutes, we talked about this before, 1 to 2 weeks. For the 60-minute chart, 2 weeks is good. That's about all you really need. If you end up closer to 3, or that's fine. Okay. Here's about a 2-week view. But again, I know that depending on the size of your charts and so forth, you want to make sure you get at least the minimum. If it's a little extra on the initial view, that's fine. You can go ahead and drop that horizontal line. So you have the 2 weeks separated from the extra data within your chart view. Draw your trend lines. Draw your horizontal support and resistance. Take note of the overall trends that have dominated that look back period. And take your clock angle reading of the wave. Again, 2 weeks on the 60-minute time frame. All right, the 4-hour time frame is a minimum of a month. Okay, if you end up closer to 2 months, that's fine. It's not unusual to end up with about a 6 to 8 week view, but a minimum of a month. So here I have September the 15th, pretty close, but no cigar. Here, the next shot out, I'm at the last week of July. So I have all of August, all of September, all of October, and then some of November. So this is huge, right? This is way more than I need, but I can go ahead. So I go back to about September the 10th, draw my vertical line. That's my look back, but I can take a look at just what's been happening over the course of the last 2 months. I think it's pretty interesting, though, when you look at August, and even though it's outside the look back, you can see the trend that really has dominated. This is a much larger downtrend than even this recovery, this correction here. But regardless, again, focus in on that look back, and then what else do you want to do? Hone in on the current clock angle. Take that clock angle reading. All right. And of course, we talked about the daily. 1 year. So now you know how much data to have on your chart according to which time frame you are looking at. That is the look back. Major and minor levels. From here, once you've drawn all those lines and levels from the look back, let's talk about how to differentiate between major and minor levels. So for that, let's go back to our little makeshift whiteboard here. So major and minor levels. So part of that, like I mentioned before, part of working with that programmer, and this is a huge learning experience for me, part of that was understanding what it is that goes into consciously deconstructing what it is that you need to have on your charts in order to do these things automatically. And that's where, we started off with that look back, where my programmer asked, how far back do you look for those touch points? Okay. And that's where I started to learn the difference between major and minor levels. So there are 4 aspects to this, and I wrote about this initially in my first book, Forex Trading for Maximum Profit, which oddly enough I did not name. I named my second book and third book myself, but this one was done by the publisher, which I didn't care. It was about Forex trading. It could have been called Forex Trading and a Chicken Parm Sandwich. Doesn't matter. It's about what I knew about Forex trading worked for me, and part of that was the 4 aspects of the major and minor levels. So what are those 4 aspects? All right, so this actually, I wrote about this in chapter 9, which was called The Difference Between Major and Minor Trend Lines. And one of the things that I wanted to differentiate for people is that there's a good reason to differentiate the two. Why I want people to do that. And I usually will make my major trend lines thicker and my minor trend lines thinner on my chart. At least the tool that I have to automate it also does that. So a major trend line actually has usually 2 touch points or more. So usually it's 3. It's closer to current prices as compared to the minor. So part of that discussion we had about power stats as to which lines were going to be actionable sooner rather than later, that's the difference between major and minor levels. The major one will be closer to current price action as compared to the minor. So it's a comparative discussion, of course. Major and minor trend lines also, when you're thinking about this, think about the number of touch points. More will make it more major. Think about how close the trend line ultimately is to price action. You also want to consider, again, that it's a comparative analysis, and part of that is keeping in mind how far back within the look back the line begins. So if I have a trend line that's very short in nature in terms of the look back, so it doesn't go very far back. That's going to be more of a minor trend line. Going further back into the look back makes it more major. If it's a larger, longer support and resistance level or trend line. So again, the touch points, typically you start getting 3 touch points or more. We'll make it major. A big one, again, that big one is the proximity to current price. Because how actionable it is a huge factor of being major or minor. And as I'm typing this, I'm actually sifting through one of my books. Okay, here it is. You know, it's amazing. I hardly have any copies of my own book in my office. It's amazing how often I lose these when people come visit me. Anyway, again, I'm flipping through Forex Trading for Maximum Profit for any of you that have that. It was first published in 2005. Wow, okay. Huh. So some 6 years ago. Almost 7. Wow. Anyway, so I flipped over to page 44. And, it's a relatively short chapter, as are most of the chapters in this book. But, wow, I really put it well here. So I'm just going to read it to you because it actually tells it better than I probably could right now. All right, let me just read it to you. It's a quick little section, and this will, I think, succinctly sum up this difference between major and minor levels. All right, so I write here, even though both types of trend lines can confirm a breakout or breakdown, we place more importance on the major trend lines. Here's how I differentiate between the two. Each trend line is assigned a score based upon 4 criteria: total length, number of touch points, continuity of the touch points, and proximity to current price. I'm not literally taking score, rather I'm comparing the available trend lines to one another. So as I was mentioning before, that it's a comparative analysis, right? I'm looking to see how long the trend line is from the first touch point to the last. I'm counting up how many total touch points make up the trend line. I'm looking for gaps or major and sudden rallies and sell-offs. And that's part of, by the way, that's part of the price organization that we would notice if we were looking at the wave and at the grab candles as well. Finally, I want to see how close the trend line is to current prices. The trend line that has the highest overall score will be drawn thicker and thus be a major up or down trend line. So really what I try to summarize in that one paragraph with the 4 criteria and the fact that it's going to be more important for me to see that the current price action is closer to a particular trend line, because that makes the decision level that much more imminent and makes that trend line much more major in that regard. But it's not the only criteria. Okay, so I went over those criteria, all the criteria as well. The continuity of the touch points, that's one of those kind of subjective readings where I'm looking at the touch points to make sure they have a kind of a spacing in between them, because sometimes you'll find that some touch points are all scrunched up together. You want to see a healthy, uniform space between the touch points, if at all possible, rather than all the touch points congregating from one area. That will make a big difference as well. You want to see them spread out rather than bam, 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 3 touch points and then nothing. You know, that's part of that kind of obviously subjective reading of what makes a major and minor trend line. All right, so that wraps up our support and resistance, the basics, our discussion for tonight. As always, I hope this was a helpful webinar for you. I hope it elevates our discussion for future webinars. By the way, speaking of future webinars, you can check out our future webinars, mine as well as all the other webinars we host here, over at the Daily Forex Trading Edge under the Education tab. So we just finished our support and resistance basics discussion. On the 17th, next week, we'll be talking about support and resistance advanced, where I'll be getting into pivots, Fibonacci, chart patterns, and a little bit more power stats. So today was a more broad view, and then we'll get into more a more focused view on specific tools and how I set them up depending upon the market trends. We'll be doing that next week. And also in line with all that, on the 30th, Brian is going to be talking about Fibonacci retracements. So also in line with that whole discussion of support and resistance. You can check that out at the Daily Forex Trading Edge under the Education tab. Also, if you haven't already been, I talked about this at the top of our discussion, but head on over to Interbank FX's YouTube channel, youtube.com/Interbank FX videos, and you'll see all the different videos we have posted here at the channel. A lot of good stuff there. Okay. Hi everybody, let's get a quick microphone. There we go. Let's play back on my last talk. This talk and the others are available also at the channel. You can watch them at your leisure, which is nice because you can pause and rewind and do whatever else from the YouTube channel. And I hope to see you, if you have any comments or questions, I hope to see you at the Daily Forex Trading Edge. Just leave your comments, and I check this frequently. And you can also follow us on Facebook, Twitter, and so forth. Actually, you can access the YouTube channel right from the Daily Forex Trading Edge. All right, as always, thank you so much for your time. I really appreciate it. And I will see you all next week as we continue this month of kind of going back to the basics and discussing support and resistance. All right, have a great one, everybody.